We were in a 4-day win streak. Sarah, coming into yesterday, suddenly the Dow is down 900 points, all on this CPI number, which really wasn't far off of what Wall Street expected. Color me a little bit perplexed.
Well, I think the markets are down to today for three reasons, and that's worries over recession, valuation, and Q3 earnings. So first of all, with the Fed tightening even more than expected, perhaps 100 basis points coming up, what does that mean for the future depth of a recession, which we do think will hit? The other issue is market valuations. Often when you see the Fed tightening this much, you can see market returns being positive the next year, but valuations in those periods have been much lower than they are today. So market valuations are too high, and that leads us to Q3 earnings. We're already seeing estimates drop by about a little over 5%, but the question is that enough? It's being led by tech stocks taking estimate cuts, but earnings probably still need to be the next shoe to drop. Whether we see that in Q3 or later on is in question, but all of those are why the market is revaluing downwards today.
Yeah, I don't like talking about currencies. I don't know much about them. I just know it's the biggest and most liquid market in the world. How much of any of this is the rise in the U.S. dollar?
That's another headwind for the markets. It's a headwind for multinationals. We think U.S. dollar remains strong because even with all of this going on around the world, the U.S. has been a safe haven because our economy and its resiliency is good for the dollar. And that also is what's giving the Fed the leeway to keep raising rates. They have been clear. They're going to continue to battle inflation. We see it remains hot. And that could happen at the expense of the economy. And with employment staying strong and consumers strong, it gives them the ability to keep raising rates in order to finally squash that inflation.
We're going to talk more about it with Diana Olick coming up. Housing, Sarah. And I'm not saying you're some sort of real estate expert, but you're a CIO. You kind of probably follow everything. Liz Ann Saunders of Schwab tweeted this out earlier today, that owners equivalent rents, which is basically what it would cost to rent back your own home, it's how they measure inflation on the housing side, was at the highest level since 1990. But at the same time, you got mortgage rates at 6%. The housing market seems to be on really shaky ground. Housing market is probably a lot more important to the macro American economy than the stock market.
It is an important component. If you look at CPI today, it was shelter, food, healthcare costs that were some of the biggest drivers of inflation. Those shelter costs have been an issue for quite a while now. If you look at the housing market, one would say that with rates going up, shouldn't that cause the markets to roll over? It really hasn't completely rolled over yet because supply is so tight right now that you have this issue. Same with the employment market, where even if demand starts to soften, supply has been so tight that both of those areas are remaining strong. And it's wages and shelter that are the two biggest components that we're worried about when it comes to inflation. They remain very sticky. And I think the Fed will have to either raise rates enough to weaken the employment market and the housing market in order to bring those down. And that would be the recipe for a recession.
But, Sarah, when they raise these rates, I mean, to that point, they're not going to say it directly because the Fed never says anything directly. But are they telling us they have to put the economy into, if not a recession, a major slowdown?
I think what they're saying is that if that is the outcome necessary to squash inflation, then that is the outcome that is acceptable. I think that, given where inflation is, they're trying to lower it by decreasing demand, by increasing interest rates. And you will eventually see that in areas such as employment, housing, and with earnings being at risk. So I think that is basically what they're saying.
Sarah Malik, Nuveen CIO, thank you very much, Sarah. Really good stuff. Appreciate it.
Thanks for having me.